Please subscribe our channel and give a thumbs up to this video. Today in our video, we will make use of the 2019 CIE October the winter version to study the topic called the ratio analysis. So I would like to make use of this video to show you the exam trend and what you need to be careful, okay, in your examination. So this is for the IGCSE level. So you can see, so the question is on the left hand side and the answer is on the right hand side. Let's get started. Okay, let's take a look part A. So for part A, we have to make use of the information provided to compute these four ratios and 2 marks for each one. So we will take a look the easiest one to get started. So the easiest one is to get the percentage of the gross profit to the revenue. So we will put, so first of all, what we need to do? We need to compute. We need to compute the value of the gross profit. So which is equal to the revenue minus sales. Okay, the revenue minus the cost of sales. So you may see in the answer, so the revenue will be 42000. So I will put it here, and then the cost of sales will be 35490. I will put it here. So first of all, we need to compute the gross profit, okay, by doing like this: sales minus the cost of sales. So I will put it down for you. So this one equals to sales minus the cost of sales. So as you can see on the right hand side, it will do it like this. And then you will put the denominator for the revenue. So that's the 42000 again. So you put this one to here, right? So when you do it like this and times 100, then you can get this one, 55.50 percentage. Now I would like to remind you that the percentage unit is very important. Okay, yep. Okay, so you make sure you have times 100, okay, to compute the percentage. So that's for the first one. So let's move on to the second one. So next we have to do it for the profit. Okay, we have to do it for the profit. So first of all, we have to compute the value of the profit. So let's take a look. So in the previous section, we have computed this one as the gross profit. So it's okay, from sales minus cost of sales, then we get the gross profit. Next, what do we need to do? We need to take a look the operating expenses, which is 3772. So we will make use of the gross profit minus, okay, the operating expenses. Then we can get the net profit. Okay, so I will put it down for you. This one we have to do the computation. So first of all, we need to make use of the gross profit. We need to make use of the gross profit minus the expenses. Okay, so this gross profit, okay, we can grab it from part A. Okay, we can grab it from part A. So remember, once again, you have to times 100, okay, to get the percentage. So let's move on to the third one. So the third one is about the return on capital employed. So what is the meaning of return? Return, that means net profit. So let's put it down. So that is okay, we can grab it from part B, right? So this one, let's take a look. On the right hand side, 6510 minus 3772, which is the net profit. Okay, so that is 2758. So you may mark it down this one as the net profit. So next, how about the return on the capital employed? Now, I would like to remind you, for this return on the capital employed, of course, is about your capital, so which is 35000 plus, okay, plus this one, plus the interest long-term loan free from your family. So you have to put these on the denominator. So then you can get the return on capital employed. So let's take a look at the last one. For the last one, is about the rate of inventory turnover. So for this one, you have to make use of the opening and closing inventory. So I will show you. So the opening inventory will be 860, and the closing inventory will be 920. You make use of these two and divide it by 2 to get the average value. This is the average inventory. So remember, you have to make it divided by 2. Next, you have to put the cost of sales in the denominator. So I would like to remind you, this is not sales, but cost of sales. So you put cost of sales on the denominator, and you put average inventory in the denominator. Okay, remember, you have to do it divided by 2. And one thing is very important is that this is times. Okay, so you don't have to times 100. Okay, I repeat, you don't have to times 100 for this answer. So that's all for part A. So let's move on to part B. So for part B, it talks about, okay, the owner try to compare the result with her brothers, and she found that the gross profit is much lower, okay, than her brothers. So we have to give 2 explanations. So before we do that, first of all, we have to take a look the business nature of the brothers and the owner of our business. So for the brothers, they are the wholesalers. So they are the wholesalers. But on the other hand, okay, how about the owner of this business, Rashida? So as a business trading for fruit and vegetables. So then you can see, right? The goods are different. Okay, so the goods are different. Of course, for the brothers, they sell furnitures. So of course, for furnitures, they would have a higher profit markup, okay, than the fruit and vegetables sold by the owner, Rashida. Okay, so let's put it down. So that's the reason. Okay, so you can grab it from the case. So let's put it down. You have to read the case to get the answer. Okay, so as you can see, we have to refer back to this one. We have to refer back to this one to grab the answer. So let's move on to part C. So for part C, we have to suggest the reason why the inventory turnover rate will be higher. So that's, of course, is about we have to talk about the nature of the fruit and vegetables. So let's highlight, okay, they are everyday product. Okay, so for fruit, they are everyday product. On the other hand, for furniture, they are not purchased daily. Yep. So on the other hand, okay, so vegetables, they have to sell very quickly, otherwise they will go bad. Okay, but for the furnitures, you may put it for a very long time. So that's why for the fruit, okay, they would have a very high inventory turnover rate than the furnitures. So you may mark it down. For this ratio analysis chapter, you have to understand the nature of different products, okay, like fruit and vegetables and also furnitures. So that's what you need to be careful. Okay, so let's move on to part D. So part D, it talks about, okay, the expenses that include in furniture but not fruit and vegetables. So that's quite easy. Okay, say for example, okay, so you can read the answer. So like for this one, so they have the insurance. Okay, they have the insurance. They also have the double debts. Okay, I would like to use these two as an example. Okay, the thing about it, in furniture, so there are trade receivables for furniture, but that's not for the fruit. Okay, you have to pay cash. Okay, but for the fruit, you mainly based on cash sales. So let me put it clearly. For the furniture, so these are for they would have the credit sales. So when credit sales are involved, so of course there are bad debts and double debts as expenses. So this one is, again, it talks about the nature of the products. Okay, so let's go to E. It talks about there are factors that you have to consider. Okay, so that's not difficult. Of course, the first one is about the different products. Okay, and also it talks about the size of the business, the type of expenses, as you can see in part D. So for this one, for different goods, this one is for part C. So you may see we can grab the answer from the previous part. Okay, so let's put it down. We can grab answer from the previous part of the exam paper. So that's you have to understand. So let's move on. So let's go to F. So it talks about, okay, Rashida would like to increase the selling price. So it talks about how would the increase in selling price affect the business. So that's, of course, there are, of course, a good or bad, right? So let's take a look at the answer. So of course it would increase your markup, or we call it margin. So the gross profit would increase. So that's the good one. But on the other hand, so there are customers, they will go elsewhere to seek alternatives, or you may call it substitutes. So that is the sales volume will drop. So that's not a good one, that's a bad one. Okay, so that's a bad one, and it might make your gross profit drops. Okay, so you have to consider both both positive and negative effects. So let's put it down. In this question, you have to consider both positive and negative effects. So let's take a look G for the last item. The last item talks about, okay, so would she like to ask her sister to join? So it talks about the comparison between sole proprietorship and the partnership. So let me drop it down for you. So this one is about the advantages and disadvantages, okay, of sole proprietorship versus partnership. So we may take a look the answer. Okay, So the answer is quite simple. First one, you have to take a look. Okay, it's about the capital source. Okay, so let's grab it down. Of course, you have wider capital sources, but still it depends on the amount that her sister can invest. So this is one of the advantages of partnership. Okay, they grab wider capital sources. So next, of course, is about, okay, will she work in the business? So that's another issue that I would like to mention. Okay, so this issue is about the nature of the partner. Is it active partner, or is it a sleeping partner? So if for sleeping partner, they do not involved in the daily operation of the business. So next, of course, is about the expenses. Okay, or expertise. Okay, so the spells. So for all these is all about the comparison between sole proprietorship and the partnership. Okay, so you might have to take a look. Okay, so for these, okay, so it's about the partnership versus sole proprietorship. All right, okay, so you might, okay, answer these answers. You can grab a few factors. Okay, 1 mark for each one. So there are a few things I would like to remind you when you try to compile this type of questions. Okay, so once again, this is for the CIE. This is for the 2019. Okay, the paper using is about 2019 October section. Okay, so we are talking about the IGCSE accounting. Okay, in ratio analysis, so there are a few things I would like to remind you. So number one, you have to study the formulas. So number two, you have to understand the nature of different goods. Number three, you have to understand different strategies or policies. How would it affect the ratio? Say for example, okay, in our paper you can see when there is an increase in selling price, how would it affect the ratio? Okay, so you have to understand this one. Okay, so these three you have to understand. Okay, and now I would like to move on. So for number four, there will be sometimes cross module. Okay, say for example, in this question it talks about the sole proprietorship versus the partnership. So there are questions not related to ratio analysis but the others. Okay, so you have to think about it carefully. Okay, so that's all for this video. Remember to put a thumbs up and subscribe to our channel.